The Fed gave banks a gift for the last 5 or 6 years by suppressing interest rates for us, right? Market rates are resetting really fast. At the end of last year, they were going up on a 55% annual rate of change. Interest earnings are only going up 8%. So eventually those two lines are going to converge, and then net interest margin is going to flatten out. It's going to start going down. This is the Fed. The Fed has essentially capped asset returns, but they eventually have to let interest rates go up. You know, at one point, the whole industry only cost $11 billion to fund back in 2012. Today, it's about 25. It's going to keep doubling. So you watch that number, because that's why the earnings have been so easy for the banks. There's no growth, really. You know, the only bank with any appreciable estimates from the street is JP. Wells is flat. Citi's okay. Citi's interesting, actually.
What about trading revenue? Because in the first quarter of this year, high volatility, that was good for trading revenue. But in the second quarter and the second quarter of 2018, market volatility and trading volume decreased year over year. So that's probably going to be a headwind then for the banks, right?
Yeah, we're slowly going to get a normal market dynamic back when it comes to trading. And the reason is that central banks own $10 trillion worth of securities. They don't trade those securities. They don't hedge them. So there's no activity around those books. As more and more debt gets back into private hands, you're going to have more normal behavior. And those customers are going to need to hedge. They're going to need to trade. You know, the Fed has made a terrible mistake because they think they can manage this normalization process with repo, but they can't. They need to be selling 10-year futures. They need to be selling swaps, and they're not doing that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.